Ladies and gentlemen, good day and welcome to Indian Energy Exchange Q1 FY26 earnings conference call hosted by Axis Capital Limited. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand over the conference over to Mr. Rohan Ghiwala. Thank you.
Thank you, Pari. Good afternoon, ladies and gentlemen. On behalf of Axis Capital, I am pleased to welcome you all for the IEX Q1 FY26 earnings conference call. We have with us the management team of IEX, which is represented by Mr. Rohit Bajaj, Joint Managing Director, Mr. S.N. Goyal, the Chairman and Managing Director, Mr. Vineet Harlalka, Chief Financial Officer, Mr. Amit Kumar, Head of Operations, New Product Initiatives and Exchange Technology, and Ms. Aparna Garg, Head Investor Relations and Corporate Communication. We will begin with the opening remarks from Mr. Rohit Bajaj, followed by an interactive Q&A session. Thank you, and over to you, sir.
Good evening, friends. I welcome you all to the IEX earning call for Q1 FY26. With me today on this call are Mr. Satyanarayan Goyal, CMD IEX, Mr. Vineet Harlalka, CFO and Company Secretary, Mr. Amit Kumar, Head of Market Operations and Exchange Technology, Ms. Aparna Garg, Head of Investor Relations and Corporate Communication, and Mr. Aditya Wali. Friends, the Indian economy continues to stand out as the world's fastest growing major economy, registering a robust growth rate of 6.5% in FY25. Notably, India recently became the fourth largest global economy, surpassing Japan. This remarkable trajectory has been underpinned by resilient domestic demand, strong investment activity, and a steady expansion of both industrial as well as service sectors. Despite global uncertainties from ongoing policy changes and geopolitical tensions, India remains a source of stability and opportunity in the international landscape. High-frequency indicators, as reported by Reserve Bank of India, revealed sustained momentum in both manufacturing and service sectors. Looking ahead, the Indian Meteorological Department has maintained its forecast of an above-normal monsoon for the June to September 2025 period, with a rainfall expected at 106% of the long period average. This bodes well for the agriculture sector, potentially boosting rural income and supporting broader consumption trends. In addition, the RBI has maintained its real GDP forecast at 6.5% for FY26. Overall, India's macroeconomic outlook remains bright, supported by a balanced approach to growth, financial stability, and inclusive development. On the power sector front, India's peak summer power demand in 2025 reached 242 gigawatt in June 2025. This peak demand was met without any power shortages, thanks to the proactive government measures. These included extending Section 11 of the Electricity Act, mandating imported coal-based plants to run at full capacity till June end, activating gas-based power plants, and ensuring sufficient domestic coal supply. Weather played a key role this quarter. Despite forecast of intense summer leading to a peak demand expectation of 277 gigawatt, early monsoon and widespread unseasonal rain kept temperatures low, resulting in lower than expected power demand. India's power consumption of 446 billion unit in Q1 FY26 was lower by 1.3% as compared with Q1 FY25. On the fuel side, ample fuel has been available at a competitive prices. India's coal production reached 247 million tons in the first quarter of FY26, similar to production during the same period last fiscal. Coal inventory as of mid-July 2025 stood at high of 225 days. For the quarter, imported coal price for 4200 GAR coal remained steady at around $50 per ton, lower by 9% as compared with the same period last quarter. Prices of imported gas have also remained stable at nearly $11 per MMBTU in the first quarter of this fiscal. Overall, the fuel situation for the sector has remained comfortable in Q1 FY26. Friends, while there was lower than expected power demand in Q1 FY26, CA expects power demand in the country to grow at a rate of 6% per annum till 2032. Based on this, MOP has been regularly monitoring the roadmap of thermal capacity addition of 80 gigawatt by 2032. The MOP has also been landing policy support to energy storage solution such as pumped storage and battery storage to meet peak demand and also enable renewable power integration with the grid. To support battery energy storage solution BESS, the Ministry of Power has finalized 2 tranches of viability gap funding mechanism. Under the first tranche, 13,200 megawatt hour of BESS projects are currently being implemented across the country, and about 9,750 megawatt hour of BESS projects have been awarded, and another 5,000 MWH are in the pipeline. More recently, under the second tranche of VGF, approval has been granted for further 30,000 megawatt hour of BESS projects to be implemented. As per the CEA, BESS-based storage of 47 gigawatt shall be required by FY32. The increased activity in BESS tenders has been driven by a reduction in battery capex cost and declining storage cost. As recently as June 2025, NVVN and NHPC both discovered rupees 2.16 lakh per megawatt per month and rupees 2.08 lakh per megawatt per month for 500 megawatt 2-hour 2-cycle tenders under the VGF mechanism respectively. As we have mentioned earlier as well, BESS would be able to store surplus power during daytime to deliver electricity during hours of peak demand while leveraging power exchanges. This would increase liquidity and potentially increase volume on exchanges during daytime as well as during evening hours. Let us now talk about few important regulatory updates and policy initiatives that continue to be conducive for power market development. The Cabinet Committee on Economic Affairs revised the Shakti policy for coal allocation to thermal power plants. The existing policy replaced the earlier policy and has attempted to make it more flexible and transparent for the power sector. In the new policy, fresh coal allocation is now available under 2 windows, one for central and state GENCOs at notified price and another for GENCOs at a premium above notified price. The policy paves the way for coal linkages to generators even without PPAs, generating unrequisitioned surplus, URS power, which can then be sold in the power markets. The revised policy would ensure continued availability of adequate fuel supply for thermal generators and help maintain liquidity on exchanges for competitive price discovery. In FY25, in a draft order, CERC proposed various changes in the design of the term ahead market across exchanges to help improve liquidity and transparency in this segment. In its order in April 2025, the CERC streamlined timelines for completion of various stages of any day single side ADSS contracts across exchanges. Other proposals include notifying predefined time slots for trade under TAM contracts. Public consultation for these predefined slots have been conducted, and a petition has been filed before the CERC for approval of the same. In this order, the regulator also proposed modification in the price discovery mechanism of the day-ahead contingency segment from the current continuous matching to uniform price step auction through draft amendments in the Power Market Regulation 2021. These amendments are open to stakeholder comments till July 2025. In May 2025, CERC issued draft guidelines for virtual power purchase agreements, VPPAs. These guidelines recognize power exchanges as authorized platform for sale of electricity by RE generator under VPPA arrangements. Renewable generators entering VPPA may sell the electricity component in the collective segment on power exchanges. This would help increase volume on exchanges. Recently, the CERC issued draft amendments to Deviation Settlement Mechanism Regulation with regards informed power charges for thermal stations. Earlier, thermal generators could not recover payment before the trial run, but the draft amendment, they are assured of payment of a ceiling price. With these amendments, RE informed power can also come to market before its commercial operation date. These amendments by CERC are designed to refine DSM, ensuring a clear framework for managing income power injections, and promoting stable grid operations under varying frequency conditions. Further to the approval in February 2025 of SEBI and CERC to introduce electricity derivatives in India, the much-awaited electricity future contracts began trading on MCX and NSE, respectively, earlier in June 2025. The launch of electricity derivatives is expected to benefit spot market participants, allowing them to hedge against any volatility in the market. With the availability of hedging instruments, the spot market will also benefit through higher participation and volume spillover. CERC recently issued an order on implementing market coupling. Order was issued on 23rd July, in which the regulator has decided to initiate process of implementation of market coupling of day-ahead market. This is to be done by February 2026 as per the order. In the same order, it is mentioned that coupling of the real-time market will be considered at a later stage. The order also talks about running a shadow pilot for coupling of the term-ahead market and stakeholder consultation for RTM and SCED coupling. Further in the order, CERC directed its staff to initiate consultation with Grid India and all exchanges on operational and procedural aspect of the day-ahead market coupling, including identifying and proposing amendments required in the various regulations. During Q1 FY26, IEX recorded electricity trading volume of 32.4 billion units, a growth of 15% on YOY basis. Revenue for the company grew by 19.2% YOY, increasing from 154.5 crore in Q1 FY25 to rupees 184.2 crore in Q1 FY26. PAT increased by 25.2%, rising from 96.4 crore in Q1 FY25 to rupees 120.7 crores in Q1 FY26. The robust performance in Q1 FY26 was led by substantial cell availability due to weather conditions and also measures undertaken by the government and the regulators. In Q1, nearly 53 lakh renewable energy certificates were traded, recording a growth of nearly 150% over the same quarter last fiscal. Due to efforts of the Bureau of Energy Efficiency, compliance by a designated consumer to meet their RPO targets has increased. The RTM segment continued to demonstrate strong growth. For Q1 FY26, RTM volumes at nearly 13 billion units were higher by 41% on year-on-year basis, highlighting the segment's critical role in helping DISCOM and open access consumer efficiently manage their short-term requirements. RTM availability to offer flexibility and immediate responsiveness underlines the opportunity to efficiently integrate renewables with the grid. Green market volume in Q1 FY26 rose 51% YOY to 2.7 billion units compared with Q1 FY25. This segment advances integration of clean sources such as coal and wind into the grid and helps obligated entities, including DISCOMs, meet their renewable purchase obligations. With an increase in hydro, wind, and sustained supply from coal-based generation, supply liquidity on power exchanges improved and drove prices down. In Q1 FY26, supply liquidity in the day-ahead market of IEX increased 45.2% on YOY basis. As a result, the average day-ahead market price was rupees 4.41 per unit, down 16% YOY, while price in the real-time market averaged at rupees 3.91 per unit, a 20% drop. On May 25th, heavy rains pushed RTM prices down to rupees 1.53 per unit on average basis, with nearly zero price during several time blocks. In terms of new products, we continue to await approval from the CERC on our petition to extend the term-ahead market contract from 3 months to 11 months. As mentioned previously, hearing for our petition on the green RTM segment with the CERC has already been completed and public comments on the petition have also been closed. We await the final order on the matter. Green RTM would provide an opportunity to reduce deviation exposure due to weather events by providing an avenue to trade green power 1 hour in advance. Our associate company IGX traded record gas volume of 24.6 million MMBTU in Q1 FY26, a growth of 109% over Q1 FY25, led by demand push from the oil marketing companies, refineries, and city gas distribution companies. The quarter was also witness to first trade in the 3 to 6 month long duration contract, underscoring market confidence in long-term gas trading on IGX. In Q1 FY26, IGX recorded a profit after tax of rupees 14.1 crores, which was higher by nearly 86.7% compared with 7.6 crores in Q1 FY25. As gas prices continue their downtrend and policy initiatives continue to remain positive in the sector, volume at IGX would continue to be robust. Friends, as CA estimates, India was to experience hotter than usual temperature from April to June this year. However, the advent of early monsoons meant lower peak demand than forecasted. Nonetheless, with CA forecast of peak demand at 366 gigawatt by 2032, the power consumption to reach nearly 2,500 BUs, demand growth will continue to drive exchange volume growth. In addition, policy measures undertaken by the government and the regulators to ease supply-side liquidity is expected to further rationalize power prices on exchange. Our diversification initiatives are also gradually gathering momentum. For the first quarter of FY26, the International Carbon Exchange ICX issued over 44 lakh IREX compared with 59 lakh IREX issued in the previous financial year. Revenue for ICX in Q1 FY26 stood at rupees 178.8 lakhs. The IREC is globally recognized digital certificate that serves as a transferable proof of generation of 1 megawatt hour of energy from renewable sources. Through ICX, we have also filed an expression of interest with Central Pollution Control Board for developing the Extended Producer Responsibility EPR trading platform and are awaiting final results of the EOI. Our formation of coal exchange stakeholders' comments have been closed. On formation of coal exchange, stakeholder comments have been closed, and we await further directives with regards legislation changes to the Mine and Mineral Development Regulation Act. The MMDRA Amendment Bill 2025 is scheduled to be tabled for discussion in monsoon session of the Parliament. The power sector is undergoing changes with the development of new market models in the form of battery storage arbitrage, firm and dispatchable renewable energy, virtual power purchase agreements, and the introduction of electricity derivatives. These market models and instruments are slated to be the future drivers to deepen India's power market and eventually ensure a successful energy transition. As India marches towards achieving its net zero targets, there is bound to be a much larger role of power exchanges in the country's energy landscape. Thank you, and now we can have question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question, you may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use their handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Bharani Vijay from Avendus Spark. Please go ahead.
Yeah, good afternoon. Am I audible?
Yes, we can hear you.
Yeah, congratulations on a good set of numbers. My first question is on market coupling. Could you refresh us regarding the advantages that IEX has over its competitors, which helped it to have a near 100% market share in the DAM and RTM segments, and also why the competitors were not able to replicate this, and if they would be able to gain market share now after market coupling implementation? This is my first question.
Yeah, I mean, IEX has maintained a leadership position in the day-ahead and RTM market over the years. In the DAM market, in fact, from the last 17 years, we have the leadership position. If you see, initially, the other exchange also had some reasonable market share of 20-25%, but over the years, they even lost that. And we today have more than 95% kind of market share And this has happened because of many factors. There is not one reason, there are many factors. One is we have a very, very robust technology platform. We have introduced new product ahead of our competitors. We have done a lot of activities with the customers. We regularly interact with the customers, understand their problem, tell them how they can use exchange to purchase cheaper power and optimize their power procurement cost. We interact with the State Regulatory Commission. In fact, we are on the advisory board of more than 12 state regulatory commissions. We advise them how exchanges can be used, power market can be used for the benefit of distribution companies. We provide a lot of data analytics to our customers. And we have a web-based technology platform. Our IT infrastructure is very robust. In spite of so many cyber security attacks, so far on IEX platform, there has not been a single penetration. I mean, it's a sum together of all these activities, because of which we have been able to have a significantly large market share in the exchange, in the day-ahead market and the RTM market. Going forward, even after coupling also, I am sure we will continue to do all these activities and maybe even more to ensure that the customers stick to us and the customer loyalty is maintained. So, and I'm very sure that we will be able to maintain definitely a larger market share even after the coupling.
Okay, sir. My second question is on the trader members who trade on behalf of their clients and submit bids to IEX. Like one significant trader member is PTC India. So I wanted to know what percentage of volumes overall for IEX and specifically in DAM market that PTC India as a trader member contribute, because being investor in one of our competitors post-market coupling, just wanted to see, if they can shift this to that competitor. So just wanted to know how much of it will be impacted.
As per the power market regulations, a trader member, if he is holding more than 5% equity, then he cannot trade in that exchange. Since PTC is holding 25% equity in the competing exchange and also on the board of that exchange, they cannot trade on that exchange. However, their percentage share is almost about 10-12% on IEX platform.
Great. Okay. Thank you so much. I'll come back in the queue.
Thank you. The next question is from the line of Sumit Kishore from Axis Capital. Please go ahead.
Thanks for the opportunity. Your clarifications on the technological edge that IEX has and your other advantages versus competing exchanges are well received. But do you see competition using transaction fee as a tool to take market share in day-ahead market post-market coupling?
We will deal with that when we reach there. Why to worry about that right now? I don't think customers really will value that part of it, because transaction fees is a very, very small component of the total power procurement cost. But if that is the case, then we will deal with that also.
Okay, because if they are not able to overcome, your barrier of having a tech advantage, and they cut price by 5 or 10, percent, you would have to follow suit in order to retain market share. Is that the right understanding?
I told you now. I mean, we will deal with the situation when we reach there. So if we have to do that, we will do that.
So would day-ahead market also include GDAM?
Well, today it is DAM only, day-ahead market only. So,
okay, so green day-ahead market would not be part of the overall day-ahead market that would be impacted.
That is the ambiguity in the order.
Yeah, it's not mentioned there.
Yes, it's not mentioned.
And based on the current status of technological, progress that Grid India might have made, do you foresee Jan 26 timeline as being implementable? And where or when do you see RTM also forming part or progress on RTM to come under ambit of market coupling, if at all?
First of all, as far as the implementation of market coupling in the DAM segment is concerned, there are a lot of things to be done. And one of the things is basically you need a common software for all three exchanges, the IT infrastructure for all three exchanges to be compatible. You need a clearing and settlement mechanism. We have to work out that part of it. And in fact, also at the commission's end, they have to formulate regulations for implementation of market coupling. So all these things will need time. So let's see. I mean, I will not like to comment on this whether January 26 is feasible or not. But based on the activities involved, I feel that it may take longer time. That is about the day-ahead market. As far as RTM market is concerned, I am reading out from the order. Given the shorter time for bid submission and running the market clearing engine, the decision to implement the coupling of RTM of power exchanges shall be considered at a later stage. So there is no decision. The decision will be considered at a later stage after gaining operational experience from the coupling of DAM. So in this order, they have not taken any decision about the RTM.
Sure. And finally, any comment from your side? Are we any closer to embed now that market coupling has been put in place for day-ahead market?
Well, I think that is something which regulator will have to decide about it. There is a much bigger issue, so let's hope that happens.
Thank you and wish you all the best.
Thank you.
Thank you. Ladies and gentlemen, please limit to 2 questions per participant and come back in the queue for a follow-up question. Thank you. The next question is from the line of Vikas Jain from SQ. Please go ahead.
Hi, good afternoon, sir. And thank you for the opportunity to ask the question. Am I audible?
Yes, loud and clear.
Yeah. So my question is regarding the recent order by CERC for the market coupling. Is there any mention of MBED in the order that has been recently received? Any comments or any insights on that part of the market coupling?
There is no mention about MBED in the order.
So is it likely that that would follow up from CERC, or there is no hope that MBED will be implemented? So what is the management view from IEX on this one?
I can't say about that. That is regulatory commissions to take up that issue. I wish that happened.
All right. Thank you so much.
Thank you. The next question is from the line of Kunal Tanvi from Banyan Tree Advisors.
Opportunity.
Please go ahead.
Yeah, thanks for the opportunity. My questions were related to market coupling. I had a few questions around that. One, if you can, explain us, how this, the regulation that has come up, how it is going to play out. Our understanding was that, all the bids would be, given to one exchange in a particular time and the prices would be discovered there. So the price discovery that used to happen on IEX will now happen across the 3 exchanges, right? Because of that, is there any possibility of change in the, pricing regulations by the regulator itself? If you can throw some light.
All this will be part of the various operational and procedural aspect which needs to be decided by the commission.
Sure.
There are a lot of things like this which needs to be decided.
Sure. So at this point in time, at this point in time, the only clarity is that, market coupling is being implemented and it will, or for the DAM market. That is the only clarity we have, right?
Yes. You are right.
Sure. The second question was, when market coupling was first talked about, like 4-5 years back when, the first draft had come, the idea was that, market coupling would be a good tool for expanding the market and long-term PPAs would also come through. Any thoughts that you would want to share, like if in the form and shape that the current regulation talks about, if was to get implemented, what are the benefits to the customers' ecosystem that would come through?
What you are asking is basically MBIT, and as far as MBIT is concerned, there is no mention of the MBIT in this order, and we are not sure when this will be taken up by the commission.
And like if this form, the current form gets implemented, what are the benefits to the ecosystem?
Well, we don't see any benefit, but then it is the regulatory decision.
So is there a possibility that because, there could be a confusion among the ecosystem because of 3 exchanges?
Confusion in what respect?
Like, for example, we have 95% market share, right? If our customers were to kind of trade on the exchange, they will continue to come on IEX and then the orders get pulled to some other exchange. This is how it will. Your customers will continue to be yours.
I wish that, and I'm sure the kind of efforts we are making, we will like to maintain that. We like to ensure that the customers remain with us.
Okay. It's from a client perspective, right? You talked about there are numerous things that play a role in terms of, value addition that you provide to the customer, including, say, technology and the support and the long-term relationship. How do you think the price play a role? Like price discovery, how important is the role that price discovery plays when you are kind of, when customers come to, buy power on the exchange? The reason I ask this question is, if you see historically, the demand on the exchange, the volumes on the exchange have been a function of change in the price. So times when price is lower, you see higher volume. So definitely the price discovered at the exchange plays some role in terms of more and more people coming on the exchange. So if you want to share some insights on that, it would be very helpful.
See, price discovery is the key function of exchange. And one of the USP of IEX has been that in the last 17 years, there has been no questions raised on the price discovery of IEX. We display all market data on our website. We display the price discovery curves, and no issue has been raised by anybody till so far, because that shows the robustness of technology platform and our price discovery process. Let's see what happens after the coupling. I will not like to comment anything on that at this stage.
Sure. And one last question was on, apart from IEX, since we have like very long history of operation, one competitor has a reasonable history of competition, of operations. The last one is very new. Like, will the other exchanges be able to handle this kind of volumes if, if it could get divided among 3 exchanges? Any comments you would like to?
I'm sure about one thing, that before implementing the coupling, regulator is definitely going to do the mock drill to check about the capability of the different exchanges, the IT infrastructure available, and the capability of the exchange, and then also do the mock trial with the big data post-trade basis. So,
sure.
And that it will be seen what are the deficiencies in the system and how to take care of that.
Okay, sure. Thank you.
Thank you.
Thank you. The next question is from the line of Prateek Jain from ICICI Prudential AMC Limited. Please go ahead.
Yes, sir. My question, am I audible?
Yes.
Yeah. Sir, my question is regarding other income. So it was 120 crores in FY25, and this quarter it's 42 crores, up 37% by and by. So why is this large increase, and can you broadly explain the source of this income? What part of it comes from the interest on margin money, and what part comes from the investments that belong to IEX?
The increase is mainly because of the one target maturity fund investments we had in our books. Whereas because of the rate cut by the RBI during the first week of June, we had got a decent mark-to-market gain, so we capitalized on that gain. We redeemed the funds and recognized that gain. That was the one reason.
That's only the other.
And second, we had some investment in the Nifty 50 index fund. So around good amount of mark-to-market gain was during this quarter because of the market made a good recovery from 22,000 to almost 25,000. So these two factors were the main reason where we had a decent performance during this quarter.
Okay. And sir, regarding that, let's say about FY25, so if we have to look at the breakup regarding our own investments versus interest income and from margin money, so what sort of proportion would that be?
It will be 2/3 will be from the own fund, and around 2/3 to 3/4, about 75% will be from the own fund, around 25% from the float and other income.
Okay, understood. Okay, thank you, sir.
Thank you. Ladies and gentlemen, please limit to ask two per questions participant, and please come back in the queue for the follow-up. Thank you. The next question is from the line of Devesh Agrawal from IIFL Capital. Please go ahead.
Good afternoon, sir, and thank you for the opportunity. Firstly, sir, to start with, just wanted to know your thoughts. Can this order be overturned by CERC? Is there any recourse that we have?
If CERC decides to do that, they can do it definitely.
No, in terms of any legal opinions that you would have seen over the last 2 days, which gives some comfort that there is a case to challenge this.
We are evaluating this order, so we haven't made any view on this at the moment.
Right, sir. So, sir, in case assuming this goes through, one of the moat that we talked about was the technology. So when we talk about technology, is it the price discovery part is what we highlight, or is it the integration that we would have done over the years with the buyers and the sellers? That is like a moat for us.
It is, I think, combination of everything.
The reason I asked because you mentioned that there is a common software that will be developed to do this market coupling. So in terms of price discovery, will be taken care by this common software?
Yes, you are right.
So then what we are left with is the integration part. That we have.
We have done so many things. Out of that, one thing is being taken out. So rest of the USP still remains. Rest of the activities which we have done, they still remain with us, and I'm sure we will be able to get benefit of that.
And sir, is this something that will be very difficult for the competition to replicate in terms of, or they can do that over time, say probably 2-3 quarters or 4 quarters, and they'll be able to invest and replicate this, whatever technological advantages?
They had 17 years to replicate this.
Oh, so it's much difficult than that.
Yes.
Right. And so finally, one last one. If we were to assume that with market coupling, if we have to sustain a market share of say more than 40-50%, then what would be those key advantages that we would have to sustain that higher market share compared to the competition?
Yes, we are working on all these strategies and we'll let you know in due course of time.
No worries, sir. Sure. Thank you so much.
I can assure you one thing, that we are not working on retaining 40-50% market share. We are working to retain the present market share.
Thank you. The next question is from the line of Lokesh Manik, Volume Capital. Please go ahead.
Yes. Hi, good afternoon to the team. So first question is, in the order, the savings mentioned is 52 million units over a 4-month period. Now, the Green India report is not available for public viewing. Any sense on this savings could have been derived by coupling only the number 2 and number 3 exchange, because savings is nothing but inefficiency that is present in the system, which they seem to have made efficient by combining all the 3 exchanges.
Okay, number one,
The result that we got to
increase of 52 million units no, it's not a saving. It is an overall volume cleared increases by 52 million unit in trade of 24 billion units. In 24 billion units, 24,000 million units, there is an increase of 52 million units, which is insignificant. I don't think such numbers can be a reason for doing the market coupling.
Absolutely correct. So my second question is, you talked about a lot of the order talks about amendments and operational procedures to be implemented. In any scenario, in any of these amendments, will there be a state involvement? The involvement from states will be required from the 28 states.
Question is not clear. Can you repeat, please?
Will they have some form of approval from their end also will be required for these amendments to take place? The order talks about some amendments in the Act.
All these approvals will have to be done by the Commission only. There is going to be a new regulation for the market coupling.
Right. So will the state commissions be involved in this?
No. State Commission has no role to play in this.
Okay. That's the clarification I needed. Thank you so much, sir.
Thank you.
Thank you. The next question is from the line of Mohit Kumar from ICICI Securities. Please go ahead.
Good afternoon, sir, and thanks for the opportunity. My first question, sir, have you heard anything on the coal exchanges and EPR trading?
Coal exchange, we haven't heard anything about it, but I was reading in the newspaper that MMDR Act is going to the Parliament for some amendment. And I don't know whether that Coal Controller of India will act as the coal regulator for the purpose of coal exchange, whether it is there in that or not. We have not been able to find out that. But if that is there, then that is definitely one positive step in the right direction for coal exchange.
And anything on the EPR side, sir?
Yeah, on EPR side, I think CPCB is yet to take a decision on that. We are awaiting the response.
Understood, sir. My second question is, what explains the sharp increase in the gas volume in the quarter and the sustainability of this number in the coming quarters?
Yeah, gas exchange increase with respect to last year. Yes, there is a significant increase, but then the numbers are still small in comparison to our expectations. So I'm sure in the coming quarters you will see much better number.
And how do you see this?
That the domestic ceiling price gas by Reliance was sold for 3-month period in one lot, and that also led to significant increase in the volume.
And how significant is the recent PNGRB regulation, which allows only 2 tariff zone compared to, I think, earlier there were higher 3 or 4 tariff zone, if I'm wrong. If I'm right, sir, right? So, for sure.
Definitely, these regulations are conducive for gas market development. Initially, there used to be 4 zones, then it came 3, now it is 2. And in fact, like in power sector, we have injection and draw charges. So, in gas sector also, invariably it is only entry and exit tariff. So, they are going towards that slowly. That's a good thing.
Understood, sir. Thank you, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Rishabh Shah from Bulwark PMS. Please go ahead.
Am I audible?
Yeah.
So I have one question. The other exchanges will have other kind of system, their competitors. So both systems like
can you slightly louder, please?
As a competitive systems, our system won't be the same. So if a user is comfortable with the IEX platform, what incentive would he have to shift to a new platform?
Your question is not clear. I think what you are talking about is that if the competitor's platform is not similar to our, what benefit we have in shifting there?
Yes.
No, see, regulator will have to decide about the common platform, the common software, and also the IT infrastructure all across all three exchanges compatible to the requirement of the system. So these kind of things can be done only after that.
So can we assume that if these things are not compatible, then this coupling might get removed again? If the systems of the computer are not compatible?
Actually, I mean, these are some of the requirements for implementing market coupling. And I am sure regulator will implement market coupling after fulfilling all these requirements.
Okay, fine. Thank you.
Thank you. The next question is from the line of Ketan Jain from Avendus Spark. Please go ahead.
Thank you. So my first question is on just on the competition. What steps apart from reduction in transaction fee can the competition do to attract customers? Is it something like reducing subscription fee or margin requirement? And what stops them to invest in better technology and people? So yeah, you can just some flavor on this.
See, number one, the present order is for coupling of DAM market. DAM is constituting only about 35% of our total volume. I think there are some disturbances in the line or in the crosstalk. Yeah.
Is it better?
Yeah. So DAM market constitutes only about 35-40% of our total volume. We still have almost about 60-65% volume coming from the other products. So we will continue to maintain that technology platform and continue to do upgradation of that. And even in case of DAM market also, except for the price discovery, there are other part of the technology platform, technology services, customer services, market development activities, which we will continue to do that. And I'm sure that all will basically ensure that we retain the leadership position.
Understood, sir. And sir, so I just wanted to understand one more thing. In terms of so as a customer, if I'm a customer and if I want to move my accounts from IEX to some other competition, so will I have to shut down my account? Will the company have to pay the margin money back to them?
Yeah, margin money is the customer's money. They can take it back anytime.
Yeah. Understood.
Only thing is, when they are doing trade here, they will have to ensure that margin money is available.
Understood. And what about the so just a understanding question. Say if I am a customer and only if the DAM is coupled and RTM is not coupled, so for me it will become an inconvenience for me to go to some other exchange just for the DAM. But for RTM, the liquidity will be with IEX. Will continue to be with IEX. So is that a fair assumption?
I think you can yourself analyze the situation and take a call on that. RTM, you are participating on the exchange IEX platform on round the clock basis, keeping margin for that. and then you are separately participating in other segments, other exchange, trying to bring additional margin there.
Correct.
For you have to take a call on that.
Understood. Correct. And who will be doing? Correct. Understood, sir. Yeah, this is a fair point. Who will be doing the settlement and clearing process?
Respective
exchanges. Whenever it's their turn of round robin.
No. For the bids received by them, whatever bids are settled, cleared, for those bids, respective exchanges will do the financial settlement.
Achha. Even in the coupling, even for the DAM segment?
Yes.
Understood. Okay. And as you said, there should be a new common platform which needs to be developed, right? And installed it across all the exchanges for coupling?
Yes, that is my understanding.
Understood. And who will be developing this? Regulator will nominate someone?
These are all details to be worked out.
Understood. Okay, sir. That's it for me. I'll come back to you. Thank you.
Thank you. The next question is from the line of Shubhadeep Mitra from Nuvama. Please go ahead.
Good afternoon, sir, and thank you for the opportunity. Just one point of clarity. I think this is a point that you've already talked about before. So when we are looking at market coupling and each of the exchanges, getting the opportunity to be the market coupler for price determination on a round robin basis. So on a particular day, if let's say exchange A is doing the price determination, it doesn't mean that the volumes have to also automatically flow through that exchange, right? It can flow through any of the other exchanges depending on where the bids are coming. Is that the right understanding?
Yes. Volumes will be flowing through the exchanges from which the bid has come.
Understood. Secondly, broader question on MBED versus SCED. My understanding was that with SCED already in a pilot phase and some thoughts of extending these beyond central government plans to even state-owned GenCos. Do you see MBED really having an impact since you already have an alternate mechanism to SCED? Or do you think there is space for both?
Yeah, SCED is basically a subset of MBED. If MBED is not being implemented, maybe to some extent SCED is serving the purpose. That is a optimization between the central generating stations. MBED was for central generating stations, state generating stations, IPPs, everybody taken together.
Correct. So if SCED, hypothetically, if we assume that SCED gets extended to central plus state generating stations, and that is anyway running on the Grid India platform, then MBED, even if it comes, may not have much of an impact.
No, see, SCED is basically operated between the central generating stations only. In the same SCED, if you bring the state generating stations also and IPPs, then it will be as good as MBED.
Correct. But then would exchanges still have a role to play there since that is already running on a pilot through a separate platform?
That is a different exercise. That basically just before this actual scheduling, actual dispatch, they are doing this optimization study. But then bringing state generation to the central SCED is a difficult process. That is why an initiative is being taken to do intra-state SCED. Within the state, each of the state SCED is being done to achieve some efficiency there.
Understood.
I think this is a
perfect,
slightly maybe during your next visit we can discuss in detail.
Certainly, sir. Thanks a ton. Thank you so much.
Thank you. The next question is from the line of Abhishek Nigam from Motilal Oswal. Please go ahead.
Yeah, thank you for the opportunity. So just a theoretical question. I'm not asking you for your response to this, but theoretically, what are the options available post the CERC order? Can someone go to an appellate tribunal? Can you appeal in a court of law? Again, just to reiterate, not asking you for your legal options right now.
There are many options available. One is we go ahead with this. Second is we go to CRC for review. Third is we go to APTEL. So there are many options available. I told you at the beginning of this conference that we are evaluating this order and yet to take a view on this.
Fair enough. I totally understand. It's very, very early. And the second question is that, the order says that the exchanges have to basically cooperate with the market coupling operator. Now, it's still very early days. I know this is still being sort of worked out and you are going to look for clarifications, but is there any proprietary stuff, any software which they might expect or they might need to be able to implement this? Do you think you have that clarity on that?
I'm not clear about your question. You said what they have written?
So my question is when the order says that the exchange has to cooperate with the market coupling operator, is it just data or does it include some algorithm, something that is proprietary to you?
I don't find such mention in the order. Can you tell me where it is?
Okay. I'll just connect with Aparna later on. I think that's
last paragraph 9 is the Commission hereby directs all power exchanges to share the necessary data and other information as required by the staff of the Commission and Grid India to analyze various operational and procedural aspects for implementation of coupling in DAM.
Yeah, actually that's what I was referring to.
No. This does not talk about technology or any such thing.
Yes, actually. So that was my question. So it only talks about data in that sense, right?
Yes,
that's my.
Okay, perfect. We are already providing.
Okay, perfect. That clears it. And just last question, post this disruption in one major segment, is there a sort of a rethink or a pause in terms of strategy with respect to, new product development, new segments which you are trying to enter? And because, something similar happens, in one of those segments as well, then what are the thoughts over there?
See, product development is a continuous process.
Sure.
5 years back, we had only one product, they had market and government market. Now today we have so many products available. So in future also, this is a continuous process. We have already filed petition for the green RTM market and also a petition for peak power. So 11 months contract is already with CRC. So it is a continuous process. In due course of time, as and when we find that there is a need of a new product in the market, we will take up that.
Perfect, sir. Thank you so much. Thank you for giving me a chance here.
Thank you. I think it's already about 3:30. So can we have one last question or two last questions?
Okay. The next question is from the line of Nikhil Abhyankar from UTI Mutual Funds. Please go ahead.
Yes. So just one question from my side. So can you just share the terms of, revenue share agreement that you have with NSE and BSE for the power derivatives?
I don't think there is a need to share that. We have an agreement with MCX so that they can use our price.
But what portion of the power derivatives revenue shall go to us?
I don't think these things are necessary to be discussed here.
Sure, sir. Thank you.
We are not paying anything to them, that is for sure. I think if there are no more questions, can we close the conference?
Thank you. I now hand over the conference to management for closing remarks.
Yeah, Rohit, please.
Thank you, friends. I would like to thank each one of you for being part of today's call. Throughout this quarter, we witnessed efforts from the government and regulators to establish a favorable policy and regulatory climate to develop the energy sector. We at IEX remain committed to contribute to the development of sustainable and energy efficient future for India. Have a wonderful evening. Thank you once again.
Thank you. On behalf of Axis Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
If you found this video helpful, please like, share and subscribe for latest upcoming videos.